Hello, welcome back to my YouTube channel. This is Aishwarya. We are doing Accountancy Class 11 under CBSE Syllabus. This is Chapter 3, Part 2. So in the previous video, we saw about accounting equation and example problem. So in this video, we'll see few numerical problems that is given in your textbook. So we'll straight away jump into the problem. Right? Now, prepare accounting equation on the basis of the following. Now, what's an accounting equation? Assets is equal to capital plus liability. So, every problem we have to prove that the assets, the total will be equal to the sum of capital and liability. So, first transaction. Harsha started business with cash 2000. So, we have to see what all the components involved in this transaction. Okay, so first they have mentioned cash is there. Okay, how much? 2 lakh. Now in what form it has come into the business? It has come as capital. Okay, Harsha is the owner. He has started a business, which means that cash will become the capital of the business. So here also you will enter 2 lakh. Okay, and now, so if we see cash is a part of asset and capital is a part of capital, or that will come under the liability side of the balance sheet. So if you see asset is equal to capital, as of now the equation is balanced. Now B, purchased goods from Naman for cash. So there is a cash purchase. So your cash balance will reduce because you will be paying out of the balance that is available. A negative number I am writing in brackets. And what is being purchased? Goods. So goods for how much? 40,000. That's right. I'm sorry. So here cash is an asset. Goods is also an asset. So 40,000, there is a decrease in asset. Here there is an increase in asset. So decrease and increase will get nullified, and again the equation is balanced. So third transaction. Sold goods to Banu costing 10,000 for 12,000. So sold goods to Banu. The name is given, which means this is a credit sales. Okay. Now goods will reduce by 10,000. Now, if you make a credit sale, what comes in? Banu is a debtor. Okay. So, debtor is also an asset. So, how much Banu is supposed to pay? 12,000. Okay. So, if you see plus 12,000 minus 10,000. So, there is a 2,000 on the asset side, and here the balance, the profit in the sale is 2,000. So, cost price minus selling price. Simple calculation, that we'll be adding to the capital account. So here net it is 2000, this side also it is 2000, again it is balanced. Next, D, bought furniture on credit. Okay, there is a credit purchase. So what is being bought here? Furniture, right? For how much? 7,000. Now, since it is a credit purchase, we'll add creditor 7,000. Now, furniture is on the asset side and creditor is on the liability side. So, asset and liabilities, again it is balanced. I think we've covered all the 4 transactions. Now, let's see the sum total of it. Cash will stand at 1,60,000. Goods at 30,000, debtor at 12,000, furniture at 7,000, capital at 1 lakh, it is 2 lakh 2,000 and creditor at 7,000. So all these from here to here it is asset. So if you to add all this, it will stand up to 2,09,000, and this side it is 2,09,000. This is a capital, creditor is a liability, and all these are assets. So assets is equal to capital plus liability, hence the accounting equation is balanced. Now let's see the second problem. So prepare accounting equation from the following. Same, what's an accounting equation? Assets is equal to capital plus liability. I'm just writing in short form. You please don't follow that. Okay. Prepare an accounting equation from the following. Kunal started a business with cash for 2,50,000. Okay. So first it is cash that's going to come into the business. Okay. It comes in the form of capital, right? So how much? That is 2,50,000. So as you see, cash is a part of asset, and this side it's capital. So both the side it's the same amount, which means the accounting equation is balanced. So if you keep checking this balance after every transaction, so the chances of making mistakes will be very less. So be cautious when you enter each and every entry. So he purchased furniture for cash. So there is a cash purchase for how much? 35,000. So the cash balance will reduce. Again reduction, I am writing in brackets. What comes in? Furniture, right? How much? 35,000. So there is a decrease in asset, increase in asset, and it will get nullified. So C, he paid commission 20,000. So cash balance will reduce. There is a reduction in asset and reduction from the capital as well. Since it is an expense, that will reduce the capital. So both the side it is reducing, again it is balanced. And then D, purchased goods on credit 40,000. So they have mentioned it's a credit purchase. So what is coming in? Goods. How much? Worth 40,000. So since it is a credit purchase, who comes in? Creditors. Right? How much? 40,000. So there is an increase in the asset and increase in the liability. Again it is balanced. You see E, he sold goods costing 20,000 for cash of 26,000. So there is a cash sales. So the value of 20,000 goods will decrease. Okay. And there will be a cash inflow of 26,000 out of the sales, right? Now here if you see there is a profit of 6,000. Can you see? 26,000 minus 20,000, that 6,000 we will add to the capital account. Now here if you see 26 minus 20,000, asset side there is 6,000 and liability side there is a 6,000 under capital. So again it is balanced, right? Yeah, we've covered all the 5 transactions. We'll sum it up. It is 2,39,000. Furniture stands at 35,000. Goods at 20,000. And capital at 2,54,000. Creditors at 40,000. Now this is capital, this is liability. All these are assets. Okay. Now if you add all this, this comes up to 2,94,000, and same this side as well. Now asset is equal to capital plus liability, hence the accounting equation is tallied, right? Now let's see the third problem. So Mohit has the following transaction, prepare accounting equation. So first, business started with cash 1,75,000. So mostly this is the first transaction in almost all the problems. So yeah, cash comes in and capital, yeah, so that is 1,75,000. Okay, that's the first transaction. So assert on one side, capital on the other side, it is tallied. Purchase goods from Rohit, 50,000. So goods, it's a credit purchase. Goods worth of 50,000 is coming in. So we'll also add creditors 50,000. Okay. So there's increase in asset, increase in liability. Again, it is tallied. Then sale of goods on credit to Manish costing 17,500 to 20,000. So the cost of the goods that's been sold is 17,500. That we'll deduct from the goods, and it's been sold to Manish for 20,000. So it is a credit sales. So we'll add debtors. Okay, and that is being sold to 20,000. So what is the profit that is being made on the sales? The difference is 2,500. That we will add to the capital. Okay. Then D, purchased furniture for office use. So this is a cash purchase, 10,000. That we'll deduct from the cash. Furniture 10,000. So both are asset. One asset is reduced, other is increased. Again it is balanced. E, paid cash to Rohit in full settlement 48,500. So Rohit supposed to pay 50,000, but there's some discount that is being received, so only 48,500 is being paid. So his full 50 is closed, and the discount amount that is being received will be added to the capital account, 1,500. Okay, I hope this portion is clear. And then we move to the F. Cash received from Manish 20,000. Okay, so 20,000 is being paid by Manish. So here we will detect. G, rent paid is 1,000. Okay, so this is an expense, so that we will subtract from the capital. H, cash withdrew for personal use 3,000. So 3,000 is being deducted. So that will again be deducted from the capital. Okay, expenses we will be deducting from the capital, and income will be added. So yeah, we've completed all the transactions, and now you can total this. This is coming up to 1,32,500, and goods 32,500, debtors is nil, furniture is 10,000, your capital account at 1,75,000, and creditors are nil. So this is capital, liability, there is no liability, and from here till here it is asset. Okay, so this comes to a total of 1,75,000, and this side also it is 1,75,000, and hence it is tallied. Now we'll see the fourth problem. So Rohit has the following transaction. Prepare the accounting equation to show the effect of the above transactions on the assets, liabilities and capital. So again they are asking for the accounting equation. So accounting equation is assets is equal to capital plus liability, right? The first transaction, it goes commenced business with cash 1,50,000. So cash that's coming in, as capital, right? How much? That is 1,50,000. Next, purchased machinery on credit 40,000. It's a credit purchase. So what is coming in? Machinery for 40,000. Since it is a credit purchase, we are supposed to pay later. Okay, then there will be a creditor account. Okay, so that will also stand at 40,000. Sorry, I'm just writing 1,50,000 here. Okay, so first transaction 1,50,000 both the sides. Second transaction, machinery asset on one side and creditor is a liability on the other side. So as of now the equation is balanced. The third transaction, purchased goods for cash 20,000. So cash balance will reduce by 20,000. What's coming in? Goods worth 20,000. So asset side, one amount has reduced, the same other, the another asset has increased, so it will nullify. Then D, purchased car for personal use 80,000. So 80,000 balance will reduce. Since it's a personal use, we will not write any car here. Car is not for the business, it's for the personal use. So we will subtract that from the capital account. Okay, it's withdrawal. Then E, paid to creditors in full settlement 38,000. So we are supposed to pay creditor 40,000. So we are paying only 38,000. So the balance 2,000 is the discount received. Okay. Usually on early payment, sometimes they give discount, right? So only 38,000 is paid. The 2,000 discount is like a income. So that we will add to the capital account, and here we will clear off the entire 40,000. So net, if you see, on the asset side there is a reduction of 38,000. On the liability side, if you see, minus 40,000 plus 20,000, again minus 38,000. On the liability side also there is a reduction of 38,000. So make sure you check after every transaction so that you avoid mistakes. Sold goods for cash costing 5,000 for 4,500. So they have sold for loss. So 5,000 worth of goods we will reduce. It's a cash sales. So 4,500 is coming in as cash, and the 5,000 loss we will deduct from the capital account. 500 loss, sorry. So if you see net here, minus 5,000 plus 4,500, asset side there is a decrease of 500 rupees. Capital side, capital also, or the liability side also, there is a decrease of 500 rupees. And then we will see G, rent paid 1,000. Okay, there is an expense paid 1,000. So this side we will deduct it from the capital. Both the side there is a deduction. And then commission received in advance. Okay, so cash that is coming in as 2,000. And for the capital account also it will be added, it's an income. So both the side 2,000 is added. So yeah, we have entered all the transactions A, B, C, D, E, F, G, H. Okay, now we'll total it to check if both the side is balancing. So cash stands at cash stands at 17,500, machinery at 40,000, okay, goods at 15,000, capital at 72,500, and there is no creditor. So all these are assets, this is capital, and there is no liability. So this side it is 72,500, and this side also it is 72,500. Assets is equal to capital plus liability. Done. Now let's see the fifth problem. Use accounting equation to show the effect of the following transaction of Mrs. Royal Traders. So accounting equation is accounts is equal to capital plus liability, assets is equal to capital plus liability. So first, started business with cash. So cash that comes in, which is 1,20,000, and capital 1,20,000. So cash is coming in the form of capital. Okay. Then comes purchased goods for cash 10,000. So cash balance will reduce by 10,000, and what's coming in is goods worth 10,000. So the one asset increases and the other decreases. Again, the equation is balanced. Next comes rent received 5,000. So I'm adding it to the cash, and it's an income, and I'm adding it to the capital as well. Then comes salary outstanding 2,000. So outstanding salary means a salary that is yet to be paid. So it is a liability. So we'll write it here. Okay. So 2,000. So that is an expense, right? So that will be deducted from the capital. Then prepaid insurance. Again, an expenses which is paid in advance or prepaid is an asset. Okay. So that will reduce the cash balance, and prepaid insurance is an asset. We'll add it here. Okay. Then comes received interest of 700. It will be added to the cash and capital. Okay. G, goods sold for cash costing 5,000 for 7,000. So 5,000 worth of goods is being sold for 7,000. So if you see, the profit here is 2,000, which will be added to the capital. Alright. And H, goods destroyed by fire. So 500 worth of goods is destroyed by fire, which is a loss. So again, we'll be subtracting the same from the capital as well. So now we will sum up everything. Cash will stand at 1,22,000. Goods at 4,500. Prepaid insurance at 1,000. And capital at 1,25,500. Outstanding salary at 2,000. Now this is the capital, this is the liability. If you sum up these two, it comes to 1,27,500. Here all these are the asset portion. If you sum this up, it comes to 1,27,500. So both are equal, and hence the accounting equation is balanced. With this, we've come to the end of the video. The same video is also available with Tamil explanation, the link of which will be given in the description. If you have any doubts, do let me know in the comment section. The rest of the problems we'll see in the next video. Until then, bye.